Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 4th of October 2019, so welcome everyone. Welcome to this Friday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. We'll have a look at some of the charts that we looked at this morning, see how everything's getting along after the data release. But for now, of course, before we jump into that, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so also just before we jump into the charts, quick mention of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which you can always also check out on a daily basis, and I believe you can find a lot of useful stuff here. But for now, guys, let's jump into the charts. Now the first one I want to touch on here is the DAX. Now the German index, of course, had a fantastic slide this week. I've talked about DAX on Monday, basically, and we were still hanging around here in this range. But what I was saying that for us to consider, for example, a further directional move, in let's say in order for us to aim for higher levels, ideally we need to see a nice good push above the 12,493, or for the downside, initially we'll start looking at lower levels if we see a drop below the 12,312, but if it continues to slide and slides below the 12,180 zone, now this is where it could turn out to be ugly for the index. We managed to get a drop here below the 12,180 zone. It drifted further down. It broke its 200 EMA here on the 4-hour chart and continued sliding and found support near the 11,880 zone, and that was reached today. So you can see that now the index is reversing back to the upside. It's currently testing this area here, area of resistance, the 11,990 territory. Of course, it's around the same psychological 12,000 level. Let's see how this is going to close today, because if it's going to stay above the 12,000, then maybe we could see this one correcting back to the upside a little bit more here. We could see this one drifting towards the 200 EMA, or even these areas of resistance that I've got marked here. So for now, basically the idea here that could play out would be something like this, where we could see maybe this one, let's say, pushing higher maybe next week. I doubt that it could be today, but if it could push a little higher, then probably wouldn't be that much. If it gets back above the 12,000 psychological 12,000 level, if it closes above there, then there's a chance for this one to correct a little bit higher here, maybe test the 12,000 and 80 territory here, or maybe this 200 EMA could be a little bit a better target. So something like this basically could be possible. If it struggles to push above the 200 EMA, then yep, we will aim for another slide and we'll aim for more downside. For those who are more on the cautious side, you could in a way just wait for a drop below the 11,880 zone. This low here, this let's say we'll probably call it the lowest point of this week so far. If we get a drop below this, then yep, this would confirm a forthcoming lower low, and we could target even lower areas going into next week. So for now, this is our main scenario. Let's see how this is going to play out. In order to, let's say, get comfortable with higher levels again, ideally we would like to see a push back above the 12,180 zone here, approximately around here, guys, and then we will kind of start considering higher levels. Or to be honest, Probably I would even lower this level a little bit here just to capture this little swing here. So near the 11,142 zone, approximately there. So this is probably where we will start considering, from where we will start considering higher areas. So that's why, guys, keep your eyes on this one. Let's see how this is going to play out. For now, yes, we could be aiming for a bit more correction, but the only thing is, the only little problem here is the psychological 12,000 level. I mean, it will be very interesting to see where it's going to close. So that's why for now we're somewhat neutral on this one, and we're going to wait for for this week's close. Dow Jones Industrial Average. Now, yesterday it closed in the positive territory. It managed to rebound nicely after the ISM figures came out. They were disappointing, but this kind of the market saw this as a positive um, because it increases the chances for the Fed to cut more rates. So that's why, of course, for now their expectation is for that in October that they will cut the rate by 25 basis points. Of course, the probability is currently high, but the recent bad economic data and bad numbers from the U.S. kind of are putting the Fed in a bit of a sticky situation, because the question here is, will they actually consider more hikes by the end of this year or not? So of course there is a good probability for another cut in December, but that kind of continues to vary. So that's why we're for now keeping that off the table. For now we're focusing on this, and basically the Fed will have to decide what to do here. And for now you can see that the reaction that we got yesterday in the markets, yep, it brought the indices back into the positive territory. And for now, looking at this picture and looking at the cash index is currently around the 26,260 territory, around there. So in a way, we could see this one drifting further north here, but we'll be very careful near this 200 EMA and near this 26,415 level. I talked about this level in my videos this week. I've covered Dow Jones a lot this week, so we could see a scenario like this if it struggles to push above the 26,415 territory, or in other words, if it struggles to push above the 200 EMA on the 4-hour chart. So we'll keep an eye on this one, and for now this is our main scenario where we could see another leg of selling later on and maybe going into next week. If this suddenly, let's say, climbs back above the 26,415 territory, then there is a good chance we could see this one drifting higher, maybe towards this downside resistance line taken from the high of the 12th of September. Now, let's not forget we did have the US employment figures coming out, so they came out as a disappointment a little bit. Of course, the non-farm payroll number didn't really kind of fall far from the forecast. The forecast was around 140. It came out at 136. But the disappointment was in the average hourly earnings year on year. Those fell by 0.3%, and from going from 3.2 to 2.9. So this was a slight disappointment. So we'll have a look at some dollar pairs further down the line here. But also what was positive was the unemployment rate. Now the unemployment fell to 3.5%. So this hasn't been like that in the United States, well, for quite a while. Probably we would need to jump back into and if the data is not lying here, that's in the 70s. So last time it was like this at 3.5. It was back in the 70s. So in the beginning in the 1970. So that's why, guys, it's quite interesting. Maybe that's the reaction, the positive reaction that we're seeing in the cash index right now on the indices. So for now, guys, of course, this is the scenario that we're keeping in mind. Let's see how this is going to play out. And let me just actually drag this arrow here. So basically, that's going to be our scenario for the upside. WTI oil, very quick mentioning of this one. I talked about this recently as well, and basically what I was saying that, and recently, I mean yesterday, what I was saying that if we see a drop below the 52.1415 territory, there is a good possibility we could see this one sliding further down towards the 15.63. It did slide lower. It broke when it broke below this one. It did slide lower, but never kind of reached this area, this key area of support. And just let me show you what that area of support is. And basically that's kind of that has been running here from the beginning of June. So this key area of support continues to hold the price from dropping lower. It slid closer to it, but quickly got back above the 52.14 15 zone. So now this is, to be honest, becoming quite interesting for the buyers. It could become interesting because if this decides to break, if this downside line gets broken, then, well, in a way we could consider a further move higher. Of course, initially I was talking about this 54.73 territory. Yes, it remains for us the important one to watch, but right now, probably from the more of a shorter term perspective, in a way, what you could do here is, and let me just draw a line very quickly here. So this is the level to watch probably. So if we get a nice push above the 53 zone, and this in a way could also lead towards a break of this downside line. So keep your eyes on this 53 territory. As you can see, it continues to keep the price down. Let's see if it gets broken. If it does, then yep, we will aim for higher levels here. For now, it's very interesting, but again, until we get that break, we cannot really talk about the upside because the commodity is still running below its downside resistance line. So that's why there is still more chance for this one to drift lower. But we will aim for the downside again if we see another drop below the 52.15, and then we'll aim for the 50.63 territory. Jumping into a few pairs now very quickly. AUDCAD. Now this one also reacted on the NFPs. We saw this slide, and this is what I was talking about. What I was talking about this morning, basically, guys. What I was saying that we may see, or sorry, it wasn't this morning. It was yesterday in my trader's tea time. So what I was saying that we may see this one drifting back down at some point because we already had a fantastic rally here from the 2nd of October. You can see that we managed to break this downside resistance line, and we managed to reach the 200 EMA here on the 4-hour chart, and this is where the rate is currently balancing at. So of course, we're not excluding a small possibility for a correction. It could happen, and you can see that the correction kind of already did test our level here near the 0.8975 territory and the pivot basically. So it did not have a nice rebound, but in a way, what we're hoping to see here, to be honest, is another slide, another move lower. And if again this 0.8975 level holds, now it will just prove the point that this is quite a strong area of support from which the pair could rebound and push to the upside again. So we're still targeting the 0.9020 territory. That's marked near the highs of the 24th of September. If that gets cleared, then yep, we will aim for higher levels, and one of the levels to watch would be this inside swing low of the 17th of September, and that's around the 0.9046. So keep your eyes on that one, guys. In terms of the downside on this one, for us to consider lower levels, we need to see a drop back below the downside resistance line and below this key area of support near the 0.8923 territory. So keep your eyes on that one, guys. NZDCHF. NZDCHF, so I talked about this one this morning and just wanted to quickly show you what's happening here. So basically this morning I was talking about this steep upside line, which in a way I was saying that it might get broken, but for us to examine lower levels, this is the level that we need to watch, and this is the perfect hit that we got of this level, from which it rebounded and pushed back to the upside and pushed back above the 200 EMA. So basically one idea kind of worked out so that we could see a break of this upside line. So we got our break, but in order to consider and to get comfortable with further declines, we need to see a drop below the 0.6277 zone, which we didn't quite get. Then we would consider further declines. So for now, it's kind of, and now this where it is right now, it's for us is more neutral, because for us to get excited about the upside, ideally we would like to see this one pushing back above the, or shouldn't say back, but pushing above 0.6328 zone. This way the pair would confirm a forthcoming higher high, and we could aim for higher levels. So jumping into USDCAD now with this one, so this is what I talked about this morning as well, and basically we did have a slide. The pair continues to kind of slide below this area, this potential area of support that I was talking about, the 1.3310. of course, the 4-hour candle is not finished yet. Of course, we are getting now a break, but the 4-hour candle is not finished yet. So if we get a close above this on the 4-hour candle here, then in a way this could mean that we could have a nice rebound from this upside line, from this key area of support, which previously acted as a good area of resistance, and we could maybe push to the upside. Don't get me wrong, we still have some data that's coming out from Canada, so the IV PMIs, so that's coming out in about half an hour. So keep your eyes on that one, guys. For now, of course, yes, it is breaking it to the downside, but this is not finished. USDCAD is not finished for today. We could see this one drifting further down, but again, this is the level that I was talking about in order for us to get comfortable with lower levels, and that's the 1.3278 zone. So if we see a drop below this, we could also see a drop below the 50 EMA here, and this would just kind of could potentially attract more sellers, and we could see this one drifting back to the downside. But again, we're still keeping an eye on this one. We're not losing faith on the 1.3310 territory. In a way, it could act still as a good area of support if we see the 4-hour candle closing above it. If it stays below here, then we'll be very careful, because again, this could stay below this. Of course, it increases the chances then to move lower, but we've seen these things happening several times where then it quickly reverses back to the upside by the end of the day. So that's why, guys, for now, yes, it is moving lower. Be very careful, but this is the territory for us to consider further declines, the 1.3278 zone. So keep your eyes on that one. USDJPY. So this one, I talked about this one recently, and what I was saying, that if we see a drop below the 106.93, and by the way, this was yesterday, if we see a drop below this level here, then yep, we could consider further declines. Initially, we'll aim for the 106.57, but if that gets broken, then we could aim for the 106.32. So we did have a test of this level, this territory, the 106.57, but never quite reached the 106.32 zone, from which you can see the pair reversed back to the upside. Now, probably in normal circumstances, the technical analysis here would have worked, and if it wouldn't be for the NFPs. So the dollar has strengthened here, and we can see the push that we're having here above the 106.93 and also above the 107 territory. So it could go higher. It does have a potential to move higher. The only thing is that it does have that potential if we'll see this 4-hour candle staying above this 106.93 territory. If it does, then yep, we will consider a possible move towards the 200 EMA. But still, not everything is that clear here, because yes, we are having a nice positive reaction here on the dollar, most likely because of people market participants are thinking that the Fed will have to cut rates again here, but or actually no, let me just reiterate that. No, basically the positive reaction could be on the lower unemployment number that came out, but the overall figures still are on the negative side. So in a way, what could happen here is yes, we are having this nice pop above, but it might still reverse back to the downside and close the day below this 106.93. So that's why, guys, for now, keep your eyes on this level. If we see a drop back below this, then yep, this could continue drifting further south, and we could aim for our 106.32 level, which is the low of the 5th of September. So keep your eyes on this one. Again, like I said, with the whole Fed situation, probably that's kind of right now it's unclear, but of course, the weakness in the data could force the Fed to cut rates even more. But again, like I said, probably we'll have to wait for the news coming out of the Fed. So that's going to be for the meeting in the end of October. So we'll have a look at then. But for now, looking at this technical picture on USDJPY, we can see that yes, the bulls are trying to push this one back above the 106.93, but it's really difficult to actually see some strength here coming back into the dollar. But let's not over speculate too much here. Let's see how this is going to play out. And the last pair for this session, that's euro dollar. So euro dollar is this is what I was talking about this morning. Basically, I was telling you to keep an eye on this 1.0983 territory. So we did have an overshoot, but you can see that the pair kind of quickly got back below this level and is now kind of flirting with this 1.0964 area. So I talked about this level as well, but what I was saying that if we see a drop below the 1.0964, then this little area for us is a bit of a neutral one, because for us to consider further declines, we need to see a drop below the 1.0943 territory here, and then we will aim for lower levels. And we did see a drop, but it quickly, you can see that the bulls are really fighting this one and trying to get this one back above this 1.0964. Let's see how this is going to end, because for now, this is what I was talking about with the USDJPY. So yes, we are having a nice push on the USDJPY, but it's struggling to kind of climb higher. So the same story here with the euro dollar. So in a way, of course, the preceding trend, the kind of the trend today, this week's trend is more to the upside. The short-term trend here after we had this reversal on the 1st of October. So in a way, it could continue climbing higher, but again, for us to consider higher levels, we need to see a push above the 1.0983 territory before we could examine slightly higher levels. And as you can see, the pair is struggling to move lower, so that's why there could be a possibility for this one to reverse back to the upside here and move higher. And for now, guys, we still stick to the idea of a possible test of this downside resistance line, and then we'll take it from there, because it could in a way break this time, the third time a lucky one, I think. If this is the third time, no, fourth time could be a lucky one, and then we'll aim for higher levels. But for now, from the very short-term perspective, yes, we will be very cautious here. If we get a pop above the 1.0983, then yep, we'll aim for higher levels. If we see a drop below the 1.0943, then yep, we will aim for lower levels here. In a way, also do not exclude a possibility where the day could in a way end here, and all this kind of action could be left for next week. So also, guys, be very careful, have your stop losses in place, and let's see how this is going to play out today. Or should I say, for the remaining day of today and during the US trading session. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me on Monday, as always, at my Traders Espresso, that's 6 o'clock GMT time. For now, I hope you have a beautiful evening, beautiful weekend, guys, and I'll see you on Monday. Thank you very much for tuning in. Have a nice weekend once again, and I'll see you on Monday. Thank you very much, and bye-bye.